All right, it's that time of the week we sit down and talk about, well, politics, pop culture, all kinds of fun stuff, and a little bit of the economy. All right, dude. Let's just throw it out there, Zach, the man. If there is a war, what the hell's going to go on with the economy?
Oh man. Well, so as you can imagine, we've been talking a lot about this. It really all depends in scope, right? So if it remains, us sort of standing behind Israel, and them doing the majority of the heavy lifting, and it doesn't significantly escalate from here there, then I think that look, any loss of life is a human tragedy, but just by default, considering the size of both their economies and the role they play in the global economy, any impacts would be fairly muted. And I wouldn't expect it to make a discernible difference. Um, One of the and to be clear, I don't. I mean, I'm no geopolitical expert, but I don't really see this in the cards, and I don't. I think Iran is probably going to play this a lot closer to the vest than any of the, oh, we got to take him out. People would suggest that's my feel at this point. So, but the tricky thing about this part of the world, and I'm not telling you or anybody listening to this anything they don't know, but the tricky part about this concerning this part of the world is it can get ugly really quick. And when you look at the world today, it's not like there isn't a lot of dry tinder laying around. So, um, eh, you know, eh, what kind of impact could this have on the economy? It could be none, and it could be massive. It really depends on the scope, scale, intensity, and obviously who
All
gets
right,
pulled in.
so talking to Zach Abraham, Chief Investment Officer. So if it's quiet, they do the heavy lifting. Great. Let's just say, for the sake of argument, though, that heavy lifting isn't being done the way that a lot of people are thinking. Quite frankly, to be honest with you, and I've been very much, I'm a supporter of Israel. I'm a supporter of the Jews.
hmm
I may not be the biggest supporter of Bibi Netanyahu because I think he's dragging us into something. But we do have to get involved where there potentially is blowback. It starts to become apparent that this is going to be something we may have boots on the ground. What does that do?
Oof. Um, Again, as far as GDP is concerned, I don't think it's going to do a lot. You're going to get a war premium into the price of oil. You're going to get a war premium into the price of gold. Obviously, the oil side of it and the nat gas side of it, the energy side of it in general would have the biggest impact. Um, and it probably would not be a very good thing right now, especially when you look at the state of the economy at the moment. And I don't get me wrong, I'm not saying that it's devastatingly weak or that a recession is imminent. Um, but I'll, considering the type of economic activity that the threat of tariffs have had an impact as far as pulling forward demand, right? So when you look at tariffs, if you're going to institute tariffs, tariffs, generally speaking, and pretty not generally, pretty much universally speaking, are
Yeah.
not good for economic growth, right? Nobody would argue that. Um, that being said, you can see a stimulative effect before they take place because people are trying to front run them. When you consider the economic impacts that front running has had on the economic activity we see this year, then you look at how slow, right? How that should generate more of an economic buzz as far as positive GDP is concerned than it has, at least in my opinion. And so you see a mismatch in the data. My fear is that that is masking greater weakness underneath the surface. And so I kind of feel like we are not knocked out by any stretch of the imagination as an economy, but I do kind of feel like we've been hit by a couple rights and lefts, and we're a little staggered, you know? And if you think about throwing a war premium into the price of energy, my guess is it would be anywhere between $15 to $25 as far as oil was concerned. Nat gas, tougher to call on that one. Um, but that may be just enough to kind of tip things over the recessionary side of the deal. And the non-beneficial part of that would be that would simultaneously
Yeah.
be inflationary. right? If you get a $15 to $25, premium built into the price of oil, and obviously that increased cost of oil feeds downhill into every other part of the economy. War is somewhat stimulative, but when you look at the size and scope of the kind of war we're talking about, I wouldn't expect it to be. And then, Chad, all of that's with the backdrop of the government increasing our deficit spending
Drives
by
me
another
freaking
$500 billion
crazy. Drives
this
me
year.
so
So,
freaking crazy. What the hell are you
right,
people doing? You're
right.
telling you we're going to save
I
$1.5 trillion,
know.
but we're also going to increase debt by $5 trillion. I'm not great at math, but that doesn't add up.
Well,
Yeah.
it's DC math, Chad. See, you're not looking at these things through the right. This is how you have no increases in spending for 20 years, but your government debt doubles, right? And I'm speaking to that period of time where I can't remember if it was in the 2000s. I think it was the 2000s. But you had this rolling series, right? Of well, we haven't increased the budget, and then that's when we all discover
Yeah.
something called baseline budgeting, right? Which is, yeah, you haven't voted for an increase because it's automatically jerry rigged into the system, and somehow the debt's going up.
No
That's
doubt.
just
Talking to
DC
Zach Abraham, Chief
baseball, man.
Investment Officer, Bulwark Capital. What do you make of the interest rates? Right thing to do? Wrong? Well, I mean, Trump said yesterday, I should appoint myself. Can I do that? No, you can't do that. But what do you make? I mean, there's so many things, but that right there, right thing to do, wrong thing to do. What do we? He said there's going to be 2 cuts this year later on, but
You know, li- this is a tough one. Based on what I'm seeing, I probably, if you would have made me king for a day at the last meeting or at this meeting, I probably would have pulled down 25 basis points. I think that there's enough weakness out there. Like, so the Fed wants to be fair to Pat, like, I think that both you and I are going to probably see pretty closely on how we view the Fed. I think the Fed is one of the biggest
no,
culprits of
God,
the
yeah.
last 25 years, right? I don't think that they created our debt problem here in the United States, but I sure think they anesthetized everybody from it. Which to me is yeah, you weren't the 19-year-old that got drunk, but you were the
Yeah.
22-year-old that bought him booze, right? Uh, so I it's it's a mess, man, and um, when you look at the interest rate side of it, I really honestly think you can make an argument to either side. What Powell is saying right now, he's not wrong. I mean, he's reciting the data as it sits. You don't see. My contention is that as clear things are cooling economically, you've seen a little pop of inflation, but again, I think you have to offset that with people front running the tariffs. um, I really think a move either way could have been justified. I probably would have shaved another 25 basis points, but I don't. To be fair, and I think that you and I again have this in common. Doing what I do, managing money, I have my political beliefs, but I have to keep them separate from my investment and financial beliefs because they can conflict, and they often do. And at the end of the day, my job is to be right, and not to be theocratically right or philosophically right, right? So I think you can make an argument on either side of it. The one thing I think is impossible to make an argument for is that you could justify 1 or 1.5% cuts like Trump was talking about. You've got inflation right now creeping back above 3. Um, inflation is like a grease fire, man. It is notoriously hard to put out. It is got such a reputation of,
Yeah.
again, just like a grease fire, right? Just combusting again and coming back ferociously, and that's kind of the history of inflation. So I definitely think you could justify either way for the Fed. I think it's really hard to justify the kind of cuts that Trump's talking about. I
Talking to
just
Zach
don't see
Abraham,
that
Chief
right now.
Investment Officer, Bulwark Capital. If something was to go down and crazy, and because the one thing I always love about you guys is, and I talk about this all the time, and people ask me here is you globally you look all over the place for what's best, and where a lot of people I think over the last umpteen years just stay here because this is where you made hay. When times like this get wacky, war, the fear of this, and we've already got to pull back. We've already had so much. We were already overbought and overstimulated in our market. What does that do for
Yeah.
other markets? Are they looking for foreigners as well as Americans? Are they looking for some safe haven as a just in case?
Well, yeah, and quite frankly, that's what you see happening right now, the bid going into gold and silver, right? And primarily gold. So to be clear, gold is by far the biggest beneficiary. Well, what you need right now, when you look at the budgetary situation that the United States is in, when you look at now, and remember, I think it's really important that we put it in context, right? We're talking about running 7% deficits in an environment where unemployment is at 4% and tax receipts are at a record high. Okay, meaning it
Yeah.
doesn't get any better than this, right? You go into a recession, you're looking at 10%, man. Your deficits are going to be 10%, if not greater. And if it's a serious enough recession, you've already opened the Pandora's box that is called fiscal stimulus, right? You could easily blow the deficit
Oh,
out
God.
to 13%. So when you put that in context, what kind of impact is that going to have on the back end of the curve? We don't know. Is it going to sell off? Sure. How bad? Is it going to sell off so bad that the Fed can't try to control the back end of it with, with potentially yield curve control, or maybe all it take is quantitative easing? Bottom line is these are questions that we don't really have the answers to. And so, what do you need to do as a central banker anywhere in the world right now? Right? You need to prepare, or you need to at least hedge your dollar risk. For the last 50, 60, call it 70 years, you haven't had any dollar risk, right? Not existential anyway. People would be like, "Oh, back in the '70s." In my opinion, I think the '70s are one of the most misunderstood economic periods of time in the history of this country. I don't think the dollar was ever under imminent threat, and I think the following 20 years makes that pretty clear. But if you're a central banker and you are trying to anesthetize any dollar risk off your balance sheet, there's really only effectively one way to do it, right? Go to gold. It's the only other asset you can purchase in size, right? That is an acceptable form of payment to all the other central banks around the world and all the investment banks around the world. And it is the only form of payment that you can own that has no counterparty risk, right? Counterparty trading risk. And that's why you see the bid going into gold. And I think you're going to see that bid going into gold, probably not as strong as it has over the last 2 to 3 years. But I think you've kind of entered a new era where I will be very surprised if central banks do not maintain a level of gold on their balance sheet, an ever increasing level of gold on their balance sheet as a permanent fixture until some type of massive monetary regime shift occurs. Um, because, like I said, for the first time, you've got to sanitize some of that dollar
Absolutely.
risk, and it's
Talking
a
to
real
Zach
thing.
Aaron, Chief Investment Officer. People want to reach out to you, want to talk, want to get that risk review for free. What do they do?
Easiest way, go to bulwarkcapitalmanagement.com. You can listen to our daily dots, our podcast every day that addresses everything that's, in the world of finance, certainly. And if politics coincide and run in there, we discuss that as well. And monetary issues, anything having to do with the market. Goal is about usually a 30-minute show that covers everything that's going on financially in the world. And you can get that at Know Your Risk podcast. And yeah, that's
Right on, brother.
not,
You have
not tough
yourself a
to
good one. We'll
find.
do it again next week.
Investment advisory services offered through Trek Financial LLC, an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ. Investments involve risk and are not guaranteed. Past performance doesn't guarantee future results. Trek 24308.